Do you want to do the? Okay, excellent.
And we're recording. All right, go ahead.
Thank you, Jackie. Welcome everybody, and thank you to the New Mexico Small Business Development Center for setting up this training. Today we'll be reviewing getting yourself ready for a business loan within the business community. So I'm Shelley Brown, today's presenter. I'm the Lender Relations Specialist with the New Mexico District Office. Oh, I'm sorry, I don't have my phone number on here, but I do at the end. So I'll give you my contact information. So I apologize, I don't have that on here. Before I begin with our program, I do want to let you know about our SBA Resource Partner Network. One of them, of course, is a Small Business Development Center. We have over 1,400 partners in offices nationwide, and you can find any local resource partner near you at sba.gov/local assistance. They're there to help you, support you, advise you, and guide you. There are mentors and counselors to help you in any phase of your business. In order to find somebody, which is a Small Business Development Center, which you are familiar with, we also have SCORE, which is a group of volunteers that try to match you with somebody in that same industry that is familiar with your type of business. We have the VBOC, which is the Veteran Business Outreach Center, and that is to assist veterans in whatever phase, whether you're starting your business, you're in your business, you want to help grow your business, you want to find out where your business may be leaking dollars, they will be able to assist you. And then we have the Women's Business Center. The Women's Business Center in New Mexico is WEST, W-E-S-S-T. They are there to assist not only women-owned businesses, but socially disadvantaged businesses as well. In order to find a local assistance, you can go on to sba.gov/local assistance. You can put in your zip code and or city, and it will pull up a partner or resource partner or SBA office. So SBA or one of our resource partners will appear there. To reach our New Mexico District Office, we do have a main line. Is 505-248-8225. I generally monitor that phone. You do have to leave a voicemail. It seems a little weird, like it ends, and I don't think there's a beep at the end, which is very confusing to some. So if you do call, once the recording ends giving you instructions, just leave a message, your name, phone number, and any message you'd like, and then I will respond to you. You can also reach out to us via email. That will come directly to our email box. I generally cover that email as well, and that is New Mexico _DO, DO's for district office, so New Mexico _DO @sba.gov. You can also visit our website at www.sba.gov/NM. Today's topic is possible sources of business funding, what lenders look for in a loan applicant, which is the 5 C's of credit, which we'll review. What is a credit score and why it matters? And what's included in a loan application, including the importance of business plan, cash flow projection, and assumptions, and avoiding predatory lending practices. So funding your business, what sources are available? So when you need to fund your business, most people, when they start their business, their sources of capital is money that they saved, money from an investor who gets a share or piece of your business. So you can ask somebody to come in and take 20% of your business. They will contribute funds to your business. Money given or loaned to you by family or friends. This is very common. So most commonly when people start businesses, they start out with contributions from friends or family or money that they saved. You can also get sources of capital from money that you borrowed personally, usually through a home equity line of credit or a credit card, or money that you borrow through a business loan, which is a microloan lending program, state or other local lending programs, a business loan from a bank, or others, including a loan supported by a Small Business Administration. There's also relatively new, we say relatively new, but people are familiar with it, and that's crowdfunding. That's where you You go on and you ask for donations based on what your goals are. And in return, you usually give them some sort of perk or reward or a product. So those are like the Kickstarter, GoFundMe, crowdfunder. Those are types of crowdfunding that's available as well. Some businesses have done very well with that platform. We're going to go into grants. So there's myths about grants. So everybody thinks that it's easy to get a small business grant. Grants are available to any type of business. And there are special government grants for women, veterans, and minorities to start a business. A myth is that the government tries to keep grants secret. The truth about grants is recipients are typically nonprofit organizations. So generally there are no grants and there are no government grants for businesses to start up, businesses to expand, and businesses to grow. Grants are generally reserved for nonprofits. Grants are for industry-specific research and development. So there are grants if you are in a prototype, you have a prototype, you need to get funding to get that off the ground. There are grants available for that. Grant sources are plentiful, but locating them can be difficult. A lot of private companies do offer grants. For instance, I think it's FedEx. They have an annual competition for a grant. So you can see how competitive that would be, which takes me to the next one, which is obtaining grants is highly competitive. SBA does not provide grants to small businesses. If you are looking for a government grant, you can see the requirements, and you will see that a lot of them and the majority of them are for nonprofits, but you can review those at www.grants.gov. So what is a small business loan, an SBA loan? The SBA does not lend money. It guarantees the loan. So we do not lend the money directly to you unless it is one of the disaster loan programs. So for instance, the fires, the floods, the drought, there is funding available for that when there is no other resources available to you. That is a direct loan from SBA for those disaster hit areas only. But for a regular general SBA loan, business loan, SBA does not lend the money directly to you. It guarantees the loan. The program operates through private sector lenders that participate in the SBA loan program. The loans are for small businesses that are not able to obtain credit elsewhere. That does not mean you have bad credit and nobody will give you credit. It just means that there could be some weaknesses in that file that a lender traditionally would not lend that money. Maybe it's a startup business that's risky for the lender. So that's when they would want to use an SBA loan. They may not make that loan otherwise. However, with the backing of SBA, then they would. So this mitigates the bank's perceived risk, and it still requires a 5 C's of credit. So you need a business to start, grow, or expand. The SBA will work with approved lenders to offer microloans and SBA-backed loans with competitive terms, lower down payment requirements, flexible overhead requirements, and counseling and education. The SBA loan is a commercial loan from a lender that's guaranteed by the U.S. Small Business Administration. The requirements will be, and this is required by the lender, personal background, resumes, business plan, personal credit report, business credit report, income tax returns, financial statements, collateral, and legal documents, which we're going to review. The 7A program, that's our flagship loan program. The 7A loan is an all-purpose loan that can be used to purchase real estate, equipment, inventory, or provide working capital. Most people think that if they just receive the funding up front, then they can start their business. Funding is generally the last stage, which we're going to review, but I just want to put that out there. It is generally the last stage in your starting your business. But the SBA loan will provide funds for various uses. up to $5 million, 25 years if it's real estate, 5 to 10 years if you're using it for working capital or equipment. Again, competitive loan terms. So if a conventional lender, meaning a bank, normally would do a business loan, but their term would maybe be 5 years, but you need a longer term, that's when they would use the backing of SBA. You can have a term loan or revolving line of credit. And then the lender determines the interest rate not to exceed the SBA maximum. So we do put out what the guidelines are on the maximum interest rate that the lender can charge. However, the interest rate is determined by you and the lender. We also have the 504 loan program. This is a loan program. This is a loan program that provides long-term fixed rate financing to small businesses to acquire commercial real estate or heavy machinery or equipment. This is a low interest rate, maturity up to 25 years, depending on the use of funds. This is a two-part loan. So you have a lender that will come in and do a 50% loan to value on the first mortgage. So if you're buying a commercial building, they do a 50% first mortgage. And then we have a certified development company, or CDC, that comes in with a second lien at 40%. And then the owner, the borrower, needs to come in with 10% owner equity. So normally a lender may require 20 to 30% down on a commercial property. If they use the 504 SBA loan program, the requirement is only 10%. It is 15% if the owner equity is in business for less than 2 years or it's special use. Special use would be something like a hotel. Then we have the microloan program. This is a mission-based lenders program for nonprofits. Microloans are up to $50,000. These loans are backed by the SBA. The interest rates are negotiated between you and the microlender. The microlenders we have in our area is West at west.org, and then the Loan Fund, loanfund.org. Terms are up to 6 years. You can use the funds for working capital, supplies, machinery, equipment, and possible refinance of debt. How can an SBA loan help you? You can launch, grow, or repair a startup. You can start up or purchase a small business, access a revolving line of credit or working capital for day-to-day expenses, purchase, renovate, or expand facilities, purchase inventory, equipment, or machinery. You can purchase land or real estate or export a product or service. So getting a business loan, where do you start? What does a small business owner need to do to get the bank to say yes? First of all, you have to come in prepared before they say yes. So if you go in now unprepared, they are going to turn around and send you to one of our resource partners like the Small Business Development Center to help get you prepared for your loan. First of all, what you should do is introduce yourself. The first step is to open a business checking account. Talk to the bank officer about your business. Ask about loans that the bank may provide. We always suggest that you should start out when you're applying for a loan to start out with the bank that you have the relationship with. If you do not have a business banking account, to keep all your banking information separate, your business banking separate, you should look into doing that. That's very important. What you need to know about traditional lenders, everyone has heard jokes about cold-hearted bankers, but the truth is that lenders exist to lend. They want to make loans. But most banks must answer to the bank owners and to the agencies that regulate them. So they balance credit risk against bank profit. That's why it's important to be prepared. What you need to know about non-traditional lenders. Those are the credit unions, the micro lenders, the community-based lending programs, community advantage lenders that make loans under a special SBA business loan program. Our community advantage lender within New Mexico is Dream Spring. It's dream like you're dreaming, spring like the time of year. So Dream Spring, all one word, dreamspring.org, O-R-G. And then this says New Mexico Economic Development Department, but it's actually New Mexico Finance Authority. They do have funding available. The New Mexico Economic Development Department does have some funds as well. What is a microloan? A microloan is typically offered to businesses with smaller capital needs, usually $50,000 or less. West, again, the Women's Business Center, they do have a program to help you rebuild your credit. So if you, right now you're working on rebuilding your credit, you need to figure out how to do that. West would be a good one to contact. They will start out lending a small amount of loan, get you to pay that back, get you going to improve your credit. So the advantages of a microloan, typically for microlenders, you have more flexible credit requirements. They pay more attention to character of the business owners. They work more closely with their borrowers. They also provide counseling. They keep in touch with you constantly. They may provide technical help and advice to you, and they understand the conditions of the local community and how that may affect the business that's operating. SBA's microloan program relies on community-based organizations to provide small loans to people who want to start or grow their small business. Again, the maximum loan is $50,000. The average loan size is $13,000. Loan funds can be used for working capital, inventory, supplies, equipment, furniture, but not for real estate or to repay existing loans. Loan requirements vary from lender to lender. Microlenders also may provide help to borrowers with business basics. As I mentioned, all of them, West, DreamSpring, and the Loan Fund, all provide counseling, and they keep in touch with you throughout your loan process. So you increase your chances to securing a loan. Lenders want to know that they're making a smart choice by giving you a loan. Your local SBA resource partners can help you develop your business plan, your expense sheets, your financial statements, and your financial projections. Those are things that the lender will want to see before considering a loan application from you. We're going to go over the 5 C's of credit. So what the lenders look for, 5 C's of credit is your character, which we're going to go over each one: character, cash flow, collateral, capitalization, and conditions. So character, what is character? Character is your personal reputation and your general impression you make to your lender, which is your integrity. Especially important to non-traditional lenders, such again, the micro lenders, credit unions, so forth. So what does a lender consider when they look at character? They look at who you are, whether you lived in the neighborhood for a long time, whether you have just moved in, whether you have an account with the bank, whether you either have a loan from the bank or another lender, and how you pay your bills. Information reported on your credit bureau. Bad credit usually means a loan will be turned down. Your references, the people who you ask to vouch for your character if the lender asks. This can be somebody that you've done business with, your former boss, anybody that could speak to your honesty and good business practices. And then they want to look at your experience in running a business, which is your management experience, and the experience in the type of business you are starting. That's why when I mentioned earlier, they may ask for a resume. Let's say you're starting you have a startup business of a bakery, but you've been in manufacturing the entire time. They want to see your resume. What kind of experience do you have running a bakery? Character is also your personal credit standing. How do you find out, and how will you look to a lender? So first of all, you should order a copy of your credit history and your FICO score. The largest credit reporting agencies are the top 3, which is Equifax, TransUnion, and Experian. All are required to provide a free report to you every year. You can obtain that by going to www.annualcreditreport.com. Here's a little trick that I learned. You can go on annualcreditreport.com and you can order all 3 all at once. But when you do that, that's your 1 copy per year. What I have discovered, a little trick on this, is you can go to annualcreditreport.com and order the Equifax, and then look at the credit, see what you need to do to improve it, see where your status is, work on correcting that. And then a couple months later, you can go back to annualcreditreport.com. You've already used the Equifax, but now you can order the TransUnion and see what that has on there and see how that improved. Still work on maybe correcting your credit if there's any errors on there. And then you can go a couple months later and order the Experian. That way you can get all three throughout the year instead of all at once, because it's one and done for the year. So this you can spread out 3 different credit bureaus, like every quarter or whatever. Little trick I learned, and it really works. For your character, when they look at a FICO score, everybody wonders, what is it? It's like a big mystery what credit score is. But FICO is a credit score calculated from both good and bad information on your credit report, such as how much money you owe compared to how much money you make, how much money you owe on personal and business loans, and other credit factors, such as you pay your bills on time, if you ever had a judgment or file bankruptcy. 35% of your score is based on payment history. 30% is based on the amount owed. So if you have a credit line, $2,000, let's say, and your balance is $1,900, that is going to knock your credit down because you only, or your credit score down, excuse me, because you only have $100 available for free credit or available credit. So amount owed is based on 30% of your credit score. Any new credit, so if you just took out a new car loan, a new credit card, a new whatever, that will affect your score by 10%. Your length of credit history, they look at it. Is it new? Is it old? Have you had it for 20 years, 10 years, whatever? That is going to compile 15% of your credit score. And then 10% is the type of credit in use. So those payday loans do report, but because those are higher risk loans, that is going to have a bigger impact on your credit score than, let's say, a traditional credit card. Character again, what is a credit score? The higher score means less potential risk for the lender. So the higher score is the better score. The lowest score is, the scores go from 300, which I can say I've honestly never seen one that low. And then the highest at 850. I've seen an 850 only one time. So anywhere between there, but a good credit score is in the 700 to 800s. The lender uses a FICO score as one factor when deciding whether to approve the loan, what terms and conditions to require on the loan, and what your interest rate is. So somebody with a lower credit score may get a higher interest rate than somebody with a higher credit score. They'll get a lower interest rate because the risk is lower for the lender. What if your credit score is low? Some things need to be fixed. Review the report for mistakes. So when you do go onto annualcreditreport.com, you get it, you see there's mistakes. Review those reports for mistakes. And if any mistakes are found, contact the creditor in writing and ask to have the report fixed. Contact the credit bureau in writing and find out how to correct the wrong information. All 3 credit bureaus accept disputes submitted online. It's very easy to do. Provide copies of your letters to the lender. If the report is correct but negative, try to fix it before applying for a loan. That's why it's important to check your credit prior to. You can make your credit payments on time to fix your credit, reduce the amount of debt you owe to bring that credit score up, and if necessary, work with a nonprofit to provide free credit counseling. The second C is capacity, which is cash flow capacity. It's whether your business makes enough money to pay all of its bills, including the new loan. This is the most important of the 5 C's because it measures whether or not you can pay back the loan. You can have collateral you could have $1 million in assets in collateral, but if your business does not cash flow, you will have a hard time getting that loan unless it's going to be hard money, and that's not a direction you want to go. So the amount of money that you make or expect to make, which is your cash flow, should be sufficient to pay all expenses to allow that little extra in case something unexpected comes up. If you are an existing business, the lender will look at how much money you made or made in the past, which is considered historical cash flow. as shown in your business financial statements and tax returns, usually last 2 years plus current year to date. If you are just starting your business, the lender will rely on your business plan, which that's important when you rely on our resource partners, and then your estimates, which is going to be projections. So your estimates, consider projections, how much money you plan to make, which is your revenue, and how much money you will need to spend, which is your expenses. So you will have to estimate on those costs. So they have to be as realistic as possible. There are templates available for those. SCORE has a really good one on their website. I believe SBDC also has a very good one. The third C is collateral. This is something of value, your tangible assets that you own or you intend to buy with the money of the loan. So if you intend to buy equipment, don't be surprised when that lender wants to take that equipment as collateral. They're lending you the money to purchase that collateral. So they want to purchase that equipment. So they want to take that as collateral. Most lenders also require the business owner to personally guarantee that loan, which means it's a promise to repay that loan even if the business fails. So you close your business, you still need to make that payment. It's not like my business closed, so this loan goes away. It doesn't work that way. This may be less important to non-traditional lenders, and another reason that should be lender would use the backing of an SBA loan. So if there's some weaknesses in that, maybe there's not enough collateral to cover the loan, that is when a lender may choose to use SBA to back that loan to make that loan stronger for the lender. Capitalization, that's the other C of credit, which is business capital. That means it's your business net worth. So what your business owns, which is your assets, minus what it owes, which is your liabilities. That's your business capital. This includes money you have invested in your business, shows your commitment to the business and what you have risk in if the business fails. And a lender expects you to have contributed something to the business, which is equity injection. We always call it, you may hear that a business owner must have skin in the game. That is why there's no such thing as 100% business loan. You must be able to come in, open your business, have your business, contribute some funds to your own business. Especially with traditional lenders, lack of equity usually means the loan will be turned down. So if you show up and say, I really want to open up this, again, bakery, but you have no money to put into your business, no money to start your business, they're going to ask you that you need to start saving money, raise money, do whatever in order to start that business. You're not going to receive 100% financing to start your business. The other C is condition. Condition means a loan condition that the lender considers when approving your loan, such as the loan amount, the interest rate, what you will use the loan for example, to buy fixed assets like real estate or equipment, inventory, working capital, and how well are you doing in the community and how is your business industry doing? The basics of your loan request. How much money do you need? Lenders do not like it when you go in and say, oh, I need $50,000 to start my business and I need to buy equipment of XYZ. And then you realize you forgot things such as 3 months worth of working capital, which is money to help you pay for your daily expenses like rent, utilities, employee salaries. People sometimes overlook that fact. They just think, I just need the money. I could buy my equipment. I could start my business. Well, businesses sometimes don't start off the ground that quickly. So you may have to still pay your bills. You still have you bought equipment. You still have to pay that. You don't have any working capital to pay employees, and you cannot be there 24/7. So you have rent expenses, utilities, and so forth. So take that in consideration when requesting a loan. The basic loan request. The type of loan you're seeking. Do you need a term loan, which is a fixed amount of money and you'll pay that back during a specified period of time, or a line of credit? It is very important that every business looks at applying for a line of credit. The line of credit doesn't necessarily work like maybe our traditional personal credit cards. A business line of credit, the best advantage to use is You know you have a purchase order out there, but you're not going to get paid until you deliver the goods. We'll use that as a bakery. So maybe they'll put, a portion down to get you started, but then they're going to pay the rest upon delivery. Well, you still have to pay your staff and the lights and the rent. A line of credit is helpful in that situation because you can borrow against that line of credit, use those funds for what you need, and then when you receive those funds, the contract, the funds at the end, then you repay that loan. It's constantly working with you, with your business. You do not want to draw on that line of credit and continue to just have a balance on it. When you receive the funds, then you turn around and pay it back. That is the best use of a business line of credit. So lines of credit are definitely useful in retail businesses that may need businesses to purchase inventory. Then you can pay that borrowed money back when you sell the inventory. And then you would need to borrow more to buy more inventory. So it's constantly working for you, not against you. The basic of your loan request is, how will you pay your money back? How much can you afford each month? And the lender will assist you with this. The SBDC, once they help you with your projections, will also be able to assist you on realistically what you can pay back. How many months or years will you need to pay the loan back? Again, a lender will help you with this. Sometimes that's the reason why they would use the backing of SBA. Let's say normally they would only go 3 years, but maybe they need to go 5 years. That's when they would extend the term and then ask for the guarantee of the SBA. And then again, do you own anything of valuable, which is your collateral, that they can pledge, that you can pledge to the lender to support the loan, and how much is it worth? Again, the basics of your loan request is, what is your company's financial condition? Can you pay all your bills every month? Are you paying your bills on time? Do you ever write a check for more than you have in your checking account? These are very important items to take care of prior to approaching a lender. How much should you ask for? So your loan request equals the cash needed minus the money you will have to put into your business, which is your equity contribution. How much money does your business really need now and over the next few months, which is your short-term needs, and over the next few years, which is your long-term needs? The hard question is only you can answer, so you can seek help from technical assistance from our resources in the community. If your business is just getting started, you need to consider all business needs during the startup period. The basic of your loan request, your business plan. This is one of the most critical documents in the loan application. This helps the lenders know the who, what, where, when, and why of your business. So it serves as an action plan to manage, organize, and sustain your business, help identify and define your target market, help plan and anticipate future capital needs, demonstrates how much money you will make, intend to make, you think you'll make, and tells the story of your business. They do not have to be lengthy. They don't have to be a thesis. They do not have to be 30 pages. You can have a business plan that's 2 pages. Honestly, unless it's a big corporation, lenders do not like to see a long, drawn out business plan. You can receive we have a template at sba.gov/tools/business plan. SBDC has one, SCORE has one, and I believe West has one as well. So our business resource partners has those available. And again, I want to remind you that the resource partners are there to assist you at little or no cost. Sometimes they may have training that is very, very minimal, $5, $10, something along that line. Sometimes they're free. A lot of times when there's Zoom calls or Zoom trainings such as this, there is no charge. So keep that in mind. You should not have to pay somebody a lot of money to write a business plan for you when you can get those services provided to you at no cost. The basic of your loan request, financial information, what do you need? You need your balance sheet, your income statement, projections and assumptions, and your filed tax returns. Typically, they'll want the tax returns to go back 2 to 3 years, 3 years for SBA. You can put these together. You can put these together on your own. And if you receive assistance with your projections, make sure that you understand and agree with them and explain them to the lender. And I say that because a lot of people do not understand their own finances. I understand that a lot of people don't know how to read taxes, don't understand taxes, so they rely on a CPA to do that. That's perfectly fine, but you still need to know the basics of your balance sheet, your income, and what they're filing. So when you talk to the lender, they know that you know what's going on with your business. Again, the basics of your loan request is having a good financial system. That's critical for all your taxes are paid as required. Lenders know what they need to know about your business operation. You can use accounting or bookkeeping software to keep you on track. And assuming that your historical data is in order, the next most critical information, whether new or existing in your business, is your cash flow projections. The basic of your loan request, again, cash flow projections, which means estimate of money coming in and money going out of your business and earnings and payments. Projections should reflect how the loan will impact the business, either through purchase or additional assets, expansions, facilities, capacity, or other loan purposes. Be reasonable. So there's a lot of people that say, oh, this is such a great idea. I know I can make $1 million the first year. You may be able to make $1 million in a couple of years, but the first year, that's highly unlikely. So if you provide projections that say this, a lender is really going to be skeptical. You also want to reflect the industry data. SBDC has a great software program for that. Beware of unfair lending practices. So a final caution, not all lenders operate fairly. So protect yourself by learning how to recognize unfair lending practices. Watch out for the following: receiving a loan offer that you did not apply for. A lot of times we get phone calls every day, right, that say, hey, I can lower your credit card interest rate, and you don't even know who they are. It's just a robocall. That is a predatory lender. A lender who promises you a loan approval no matter what your credit history or credit score. They just automatically say, yeah, we can do that. Being rushed to sign papers, high interest rate and high fees. That is a red flag. Beware of unfair lending practices, which is the loan repayment terms that do not seem fair or appropriate, including balloon payments, penalties for early repayment, etc. Blank spaces. Do not sign any documents that contain blank spaces, especially if it's something like fees and interest rate, something along that line. They may come in and add it later. You've already signed it. If you have doubts, do not sign anything until you've consulted with a lawyer, trusted friend, and fully understand the terms and conditions of the loan that you are being offered. Tips for achieving credit readiness. Think like a lender. If it was your money going to support somebody else's dream, what would you want to know? That's why a good business plan, the who, what, where, when, why, is important. Good preparation is key. You should be able to answer almost any question that your lender asks about your business or your finances. And you must know your business plan and financial data. Never rely on someone else to speak for you. You always hear about some of those celebrities and so forth. They just give somebody else, access to their account. They never sign, and then next thing you know, their CPA or lawyer or whoever took off with half their money or all their money. And that's because they weren't, they trusted somebody and didn't keep an eye on their own money. Tips for achieving credit readiness. Full disclosure is required. Address any situation in your business that may appear to be a weakness before your lender raises it. And make sure that you have a good story to tell about your business and tell it with enthusiasm. In conclusion, now that you are set, you know the 5 C's of credit and why they are important. You know about the credit score, how to obtain your credit score, look at your credit score, determine what you need to do to correct your credit. And now you need to know what to avoid when you review a loan offer. You can stay connected with SBA by www.sba.gov/updates. That is our newsletter. Anything that we have going on within the SBA community, You can receive updates from us, any new programs, any new training, anything along that line, you can receive updates. You can follow us on Twitter at twitter.com/SBA_, can't really see that underscore there, but _New Mexico. You can email us at newmexico_@sba.gov. You can call us again directly, 505-248-8225. You won't get a live person. That is a voicemail system. And then for our New Mexico District Office website, sba.gov/NM. That's me, hard at work. That's my little emoji. This is my information, as I promised earlier. Shelley Brown, I'm the Lender Relations Specialist for the New Mexico District Office. I do cover the entire state of New Mexico and other states as well. My direct line is 505-248-8228. My email address is shelley.brown@sba.gov. And now what I can do is turn it back over to Jackie to see if we have any questions. Hello?
Hey, Shelley, sorry about that.
Oh, okay. I was like, oh no, I hope I didn't lose connection.
No, you're here.
Okay, I'm going to put this back on since it has my contact information.
Sounds good.
I'll put
Thank you
that
so
back
much
up.
for your time, Shelley. Anyone have any questions for Shelley?
Do we have any questions in the chat? No?
No questions in chat or Q&A. I'll give people a few more minutes. Oh, here we go. Here's one from the Q&A. Oh, thank you. And it was amazing.
Oh, why, thank you. I appreciate that. I am available, so if somebody has a personal question, again, we do rely on our resource partners heavily. So thank you, Jackie, and to Chris Garcia for help setting this up. But and if you do have additional needs, you can always reach out to them, and we can coordinate, maybe something more in depth if needed. But we
Yes,
are
absolutely.
here available. The SBDC is available, and I, of course, am available as well.
It looks like here, let's see here, we have some Q&As. It says here, what lenders in the state are the most proficient in SBA loans?
I have discovered that the best, the strongest SBA lenders are usually community banks. Community banks are generally locally owned. So the community banks in our area, I'll just throw some out there. Western Commerce, they were the #1 SBA lender last year. Prior to that, it used to be Wells Fargo. Wells Fargo did a lot of SBA lending, but because of they kind of changed their focus a little bit. So they've slowed down on their business lending, but Western Commerce is a community bank. They're our top lender last year. First American Bank is a community lender. Century Bank is a community lender, depending on where you're at. James Polk, Bank 34. So those community lenders are probably the strongest. US Bank is also even though they're a big box bank, US Bank, they are a strong SBA lender as well. So community banks seem to be the strongest SBA lenders. Credit unions will lend a little bit, but they're not strong SBA lending because they really don't have the personnel to have, there's a lot of reporting required because it is a government-backed loan. So there's a lot of reporting required that the lender is required to do. So generally the credit unions are not staffed to have that. So the credit unions will do them, but they're generally not the strongest.
All right, and we have a couple more questions here. It says, can you clarify which SBA loans can be set up as a line of credit?
That would be the regular 7A loan, but it's through an express lender. An express lender is SBA gives that lender authority to make that loan without the SBA approval. So they approve that loan in-house based on their criteria and the requirements set out by SBA. They make that loan. They do not send it in to SBA for approval. They approve it, which means it goes quicker. And those lenders that I mentioned earlier are all express lenders.
Okay, and then follow up to that question, it says, what is the current processing time on a 7A and a 504?
The 504 is, well, that all depends on the project. So 504 is going to be a little bit lengthier because there's real estate involved. So you have your appraisals and then you have your first mortgage with the lender. So that one is a little bit more detailed. That is going to depend on the project. It's going to depend on the first mortgage lender, and then it's going to depend on the CDC and the loan package. So the more complete the package, the quicker it will go. The 7A, again, that depends on how complete your package is with the lender. I've seen them, if they have their own approval authority, with either by express or what we call a preferred lender. That's where they make that loan. They do not send it to SBA for approval. If there is a lender that has to send that loan to SBA for approval, and it's a complete package, SBA's turnaround is generally about 14 days on that one. That means that the lender has to do their due diligence on their side, complete that package, get everything prepared, then submit it to SBA for approval. If they're a preferred lender, they get that package ready, they review it, the bank approves it, and then they can close the loan. So it all depends on the lender and the package and the project.
All righty, and then it says here, ooh, they're flooding in here. Let's see here. I have one that says, I am an immigrant who just arrived in New Mexico. How can I go about registering a business in New Mexico State?
To register a business, you would go to the New Mexico Secretary of State to register your business. And they're depending on the type of business. If it's going to be a sole proprietor, which means you're basically doing a Schedule C, you do not have to register that business. If it's going to be an LLC or anything more, then you pay, it's a small fee, anywhere from $35 to $50. So you register your business with the Secretary of State of New Mexico.
All righty, and let's see here. It says the rates are so high for SBA loans right now. Would using credit cards for smaller funding requirements be advisable instead, or will it look bad to have multiple credit cards on the business credit report down the road?
That is, I don't, when they say the interest rate's high, I don't know. I'm going to say it's lower than a traditional credit card. But for instance, the lender is going to dictate what that rate's going to be, whether it's going to be adjustable or fixed. But for instance, a loan that is over $50,000 and 7 years, the term is 7 years or longer, the maximum interest rate that a lender can charge, whether it's variable or fixed, is prime plus 2.75. That's the maximum that they can charge. If it's less than 7 years, the maximum they can charge is a prime plus 2.25. That's the maximum. Now, I have seen where lenders charge just less than that, and they may charge just a fixed rate less than that. So I don't know. It may be, I'm thinking it's going to be less than a credit card. But if you have a credit card that is at 3%, well, then you do the math, because, you know, that 3% interest rate, which I've never seen a credit card that low.
All right, Shelley, thank you. And then the last questions I can answer. There's several questions asking if we will be getting, presenters will be getting a copy of the slides. Usually, yes, we do go ahead and give copies of the slides, as well as a post survey after the presentation is done. So with that, I believe that's all the questions that we have. And Shelley, again, I want to thank you so much for your time and all the information that you've given us today.
Oh, thank you for having me. I appreciate it. Yes, I will revert this to a PDF
Yes.
and send it over to Chris.
Yep. And usually what we'll do to all our participants is we'll go ahead and have a follow-up email, and that will include the slides with it. All right. Well, this concludes the webinar for today. Again, Shelley, thank you so much for your time. We truly do appreciate what you do and the presentation for us. And I'm going to go ahead and end the recording here.
Thank you, Jackie. And tell Chris, thank you.